Hey guys, so in today's video I wanted to talk to you about this absolutely beautiful 1 to 3 risk to reward trade that we took on the euro versus the dollar. Not only myself but everyone else in the Discord took this along with me. Now this is a very high level trade with a lot of analysis that went in with it. As you can see, I updated everyone with all of the different PRIs that we had on the way down, so stick with me and we will break down exactly why I took this trade and how I took this trade. So first of all, let me clear off all of this that I have on the chart so that we can look at it with fresh eyes. Now, this is going to be a trade that incorporates both of the strategies that I use in my day-to-day trading. The first one is the Judas swing, for which I have a framework, and if you haven't got this, it is completely free to download. Go down in the description, hit the download button so that you can follow along with me. Whilst you're down there, don't forget to leave a like, comment, and also subscribe if you haven't done so already. And the second strategy that this trade incorporated was the order block strategy that I also run on a day-to-day basis. So the first thing that we have to do is understand what a directional bias is in the Judas swing framework and also in just any sort of trades that we take altogether. So first of all, let's go onto our charts and figure out where we are in terms of our direction. So if we go up to the 4 hour, as you can see, we've been taking a bunch of trades. So I have all sorts of things marked out on the chart. However, on this day, what I had marked out was this 4 hour wick right here. And the reason why I had this 4 hour wick marked out is because this is where we had all of this impulsive move come into the market that gave us the 4 hour break of structure to the downside. Now, because we had this exponential move to the downside, I was very interested in this wick because it took a lot of liquidity right here. And when it took this liquidity, it then plummeted and broke structure to the downside. Therefore, what we can now understand is that there is some sort of things going on the lower time frame in this area that price is going to get magnetized to and potentially give us a reversal from. So that was my first step in framing up this trade. So let's mark this out as a 4 hour order block or a 4 hour demand zone, and from there what we can do is drop down to the 15-minute, and on the 15-minute what I had marked up, if I replay the chart, is on Sunday night in the VIP updates I gave all of the members this breakdown of Euro USD. So I had this marked out on the 4 hourly, I had this wick, and then on the hourly I said we've got this zone down here, and on the 15-minute I was interested in seeing price break this 15-minute low in order for us to take shorts all the way down into this hourly demand zone. So I said if we break this 15-minute low, we can take shorts down to the hourly demand zone. So this is the 15-minute low that I had in question. However, as I came onto the morning charts on Monday, what I realized that is we also broke structure to the upside right here. Now, if we understand market structure, what we start to identify is that we've got a higher high, higher low, higher high, higher low, higher high, higher low. So if we put in a higher high right here, and we get a market structure shift on the lower time frames, what we're now setting ourselves up for is the entire 4 hour move that can potentially take us down into this hourly demand zone. So we've incorporated the higher time frames, and also we're going to be incorporating the lower time frames to try and position ourselves with the 4 hourly trend. So now this is where I understood that if we get a push above here, we can then start to look for a 5-minute market structure shift in order for us to take shorts all the way down and potentially even all the way down to break structure on the 4 hourly. Now that is over 100 pip move. As we can see, it's a 90 pip move going down to break structure. So if we can position ourselves to take us down, that would be an insane trade. So that was the theory behind potentially marking this all out. So the next step within our Judas swing framework is to understand that we have a time window and we trade between the times of 7 a.m. and 9 a.m. So this is the window that we want to look for shorts from. or in this case, we want to look for shorts from, but on a generalized basis, this is a time window where we want to see a sweep of either the Asia high or the low in line with the Judah swing framework. So in this trade's case, because we've now identified that we're inside of this 4-hourly zone and that we're now waiting for a 5-minute market structure shift, this is where we can now start to incorporate the second strategy, which is the Judah swing model, and potentially wait to see a sweep of the Asia highs. And if we get a sweep of the Asia highs, now we're in line with our order block strategy and also our Judah swing strategy. So that just adds more and more confluence into this one singular trade, which means that because it's so high confluence, I was very confident in taking this trade, which is why I sent this as a valid setup in the signals group. Now, if you guys aren't part of the signals group, I would highly recommend going down in the description and joining, because just today I posted in the results. Sorry, I haven't posted in the results, but just today we had one of the members in the group get a $3,200 payout, which I posted right here. So if I bring this down, we can see that one of our members actually ended up getting a $3,200 payout from FTMO by using my signals. Now, if that isn't amazing, I don't know what is. So I would just like to congratulate Abdullah for doing that. But let's jump straight back into the trade analysis. So here we are, and we've come to the charts at 6:30 in the morning. We've identified all of this. So now we know that we are waiting for a sweep of the Asia highs. And once we get this sweep, we can comfortably look for shorts, and we can hold these shorts all the way down to the 4-hourly low. And that would make for an insane risk to reward, right? So that was the theory behind this trade. So if you follow along with the framework, we now know that we're looking for a sweep of the liquidity, and all we're doing is marking out our Asia high and our Asia low, and there it is. So now if I play price on and we wait for a sweep of the Asia high, I'm now actually going to drop down to the 5-minute, because on the 1-minute we can look for a market structure shift. But as you can see, this price is very, very choppy. If I try and identify structure, we've got higher high, higher low, and this entire leg now is our higher high. Therefore, for us to break any sort of structure, we have to break this higher low down here. So we want to see something like this before we can classify that as a valid market structure shift. So because this move was one singular leg, a lot of people can get mixed up with all of this chop up here and end up taking bad quality trades, because yes, on this instance this might have worked, but it's not going to work every time, and it's going to lose the majority of the time, as opposed to if you stick with only looking for a solidified valid market structure shift. So because this leg is now my entire move, I jumped up to the 5-minute, which gave me a much better view of what market structure was doing. So as we can see, this is now our 5-minute low. So in line with structure, we've got a higher high, higher low, higher high. So now we want to break this, and then we want to see something like that. So that is what we are waiting to see. And if I play price on, what we can see is that price does eventually give us this beautiful break to the downside, and our entry was very, very fast on this day. So if I just quickly go back in price, what we can see is that as soon as we broke structure to the downside and we had this beautiful market structure shift, immediately I went to find the area that made us break structure or give us that market structure shift, and it was this area with the inside bar, which is just consolidation on the lower time frame, where there was an accumulation of orders before the impulsive move out. So because I saw this inside bar, I knew immediately that this is exactly where I want to target for the entry. We've also got a fair value gap just below it, which gives me even more confidence in this trade. So I hope you guys can understand that as we're building this story, as we're building the narrative for this short, there are so many confluences that I'm stacking on top of each other that is giving me so much confidence in this trade that when I go to execute, there is no doubt in my mind, which is why I'm able to execute without any hesitation. So Once we've identified where we are going to take our entry from, going back to the framework, we simply put our stops right above the local high, and we always target the opposing liquidity as our exit. But in this instance, I will show you guys where I was targeting. So the entry was right there. Our stops just above the high. So I wanted to cover the highs right here. And I also said, if you want to be extra safe, you can go all the way up here, but that does skew your risk to reward just a little bit. So I decided to go just above this high. And then from there, immediate targets would be a 1-to-1 at the Asia lows. But again, this is not a great risk to reward. We want to target just something a little bit more. So what I had in mind was that our first targets would be right here at this 15-minute low for a nice 1-to-2 risk to reward. So if I mark these out, what we've actually got is these inside bars right here, which is going to be our first target, because this is a potential area where price can continue its bullish move from. Because granted, on the 4-hourly we are bearish, you still have to understand that on the 15-minute time frame we are still creating a series of higher highs and higher lows. Therefore, until we break this right here, we are still in a bullish trend on the 15-minute. Therefore, that would be our first target. Our second target would be a break of this 15-minute low for a 1-to-3 risk to reward. And then after that, we would target the hourly zone. And then from there, we've got this 4-hourly zone right here. And then we've got all the way down here, which is the 4-hour break of structure. Now that would be a 1-to-14 risk to reward, but you would be challenged not only psychologically, but also as a trader to be able to hold this trade for such a long period of time, because we know that it's not going to happen in one day. Therefore, I always recommend that, because there are so many POIs, lots of areas, and a big area to cover, I always suggest taking partials, as there's no guarantee that price will always run all the way down to the 4-hour low. So you would always want to take partials as and when you're happy, right? As a trader, nobody can tell you what to do and when to do it, when to take money off the table. That is for you to decide, because every single person has a different risk parameter built into them. That is why I give so many different options, so that there is an option for everybody and every single person's different trading style. So that is how I had everything marked up. That is the sort of analysis that went in behind this trade. Now that incorporated the overall higher time frame direction, along with a higher time frame area of interest, along with the Judas swing framework, and all of these confluences stacked on top of each other gave me a good narrative and a good story to take this short. So now if I play price on, we get a beautiful tap straight back in, and then a nice move to the downside. So if I move up to the 15-minute, because it does take a little while on the lower time frames, but as we can see, price goes straight down to our first and second targets. So 1-to-3 is where we touched, and then from there price does decide to return, takes anyone who was break even out. So for me personally, I was trailing my stop losses, because on the 5-minute I said to everyone that if we see a market structure shift down here in this 15-minute low, that I would be taking partials and going break even. As we can see right here, we get this 5-minute market structure shift. So therefore I took some partials, I went break even, and I was able to bank a solid 2%, which is what I said right here. I was able to bank a solid 2%, went break even around here because I was trailing this high, and then from there I was taking out a break even for about $85. But at the end of the day, I still managed to bank 2%, and overall the trade was very beautifully analyzed, and that is something that I'm super happy with, because I was able to understand all of these different confluences, and I was able to understand where price can potentially go, but not be stubborn in my analysis. Basically be able to remain fluid so that I can move with the market, instead of hoping that the market does what I want it to do, right? Because as a trader, our job is to simply execute what price is giving us and not try and force our will onto price, because again, price will always do what it wants to do. So this was a very high level sort of analysis that I'm super happy with, and also everyone in the Discord, because we were able to bank a nice 2% on this trade. So I hope you guys were able to learn something from this setup, and if you did, please don't forget to leave a like, comment and subscribe, and I will see you guys in the next video.